Hello, my name is Yves Longchamp. I'm Head of Research at SEBA Bank. Today, I'm very pleased to present you our latest publication, The Digital Investor, and this is about the state of mining. Mining is absolutely key in blockchain technology, especially in public blockchain, because this is what makes it works. And the profitability is important, because if miners are not profitable anymore, then we can fear about the future of blockchain. So to introduce you to this subject, I decided to divide this video in three parts. The first one will be on price sensitivity, the profitability of miners and how price impact this profitability. The second one is, as an investor, how can I take exposure to mining business? And finally, the third part is about the state of business today, whether it's still interesting or still attractive for miners to mine, actually. So let's start with the first topic, and the first topic is about price sensitivity. We've been interested in the break-even of mining, and we have tried to understand how the movement in prices, the price volatility, has an impact on break-even. Actually, the profit function of a miner is relatively simple. On the one hand, you have a revenue, and the revenue is the number of Bitcoin you mine times the price of Bitcoin. And this is where this price volatility enters into the equation. And on the cost side, you have the capital expenditure, or CapEx, which is really the fixed investment you have to do, like buying your equipment, and the operating expenditure, OPEX, which is mainly about electricity. And actually what we observe in terms of the structure of the cost of the miner, that it has evolved over time. If you look at the last 10 years, and this is what you see on the slides, with technological progress and the miniaturization of chips, actually you see that capital expenditure has increased and operating expenditure has declined. So we are going towards something, to an industry which is more mature, when you need more investment, more fixed cost at the beginning. And the consequences of that, it's positive. This is what you see here also on this new slide. This is that the sensitivity or the elasticity of break-even to prices has declined. Here you have four lines, and this line refers to 4 generations of mining equipment. You have a S7, S9, S17 Pro, and finally S19 Pro. And as you can see, the newest generation, S19, has really low curve, meaning that the sensitivity is low, meaning that miners are able to handle price volatility much better than they were able to do it before. But again, this has a cost to do that, and the cost is to have an upfront investment, which is pretty high. So let's turn now to the second topic of this video. This is about how, as an investor, I can take exposure to mining activity. And here I think there's a good parallel to do with gold. We observe that clients which are invested in gold are very much interested and also exposed to gold mining activity. And here for Bitcoin, this is the case. Many people that are long Bitcoin are also interested to getting exposure to Bitcoin mining, actually. And we think that there are 4 ways to do that. The first one is a traditional way, buying equity share in equipment manufacturers. The second one is about buying futures on hash rates, and hash rates measure the effort made in mining and on aggregate on the market. You have a third possibility, which is cloud mining. You you invest some money into a farm that will mine for you, and you will get some returns. You don't need to take care of the infrastructure. And finally, the fourth way of investing is obviously directly mining yourself. But here I think it's important to keep in mind that mining is a full-time job, and you cannot do it like that. It also needs some good technical requirements. So we can now step to the last part of this presentation, which is about the state of Bitcoin mining industry today. And actually, we did some estimates. We built a model where you will see all the details in our publication. And by the way, I strongly encourage you to have a look at our latest Digital Investor. You have the link at the bottom of this video, where you have all the details, all the assumptions, and how we come to the conclusion. But the conclusion is positive. Actually, if you spend $1 million today, you can expect returns over 3 years of 20% per annum, which is quite nice. But on the other hand, we should keep in mind that this is a risky business because price is still volatile. And even though new technology had made progress in handling this issue, it still remains a key risk. And second, you never know whether there will be a new update in equipment, so a new generation of equipment that will mine for a cheaper price and that will make you pretty much redundant. So this is a business in itself. This is a full-time business when there are obviously potential high return, but there are also some risk. So I come to the end of this video. Today was about the state of Bitcoin mining. There were 3 parts in this video. The first one is about price sensitivity to profitability. And we have seen that with technological progress, the structure of the cost of miner has changed, so that miners has become less sensitive to prices, but at the cost of a large upfront investment. The second part is about how we can invest directly into mining. We can do it in 4 different ways. You can buy equipment share equities, you can buy equity futures, and you can also you can take position via cloud mining or directly via mining. And finally, the last part is I just presented you is about mining per se, that is still an attractive business but has some risk and needs some technical knowledge. So I hope that this video was useful to you. I thank you for watching and say you goodbye.